Hi, my name is Andy Leventis, and I'm Supervisory Economist with Federal Housing Finance Agency. I'd like to tell you a little bit about our house price index for the fourth quarter of 2015. So despite some financial instability, the fourth quarter proved to be a strong one in terms of home price appreciation. Between the third and fourth quarters of 2015, seasonally adjusted price appreciation was 1.4%. That was the ninth consecutive quarter in which prices grew between 1 and 1.5%, and the 18th consecutive quarterly increase. As a matter of fact, at the end of the fourth quarter of 2015, prices were 19% above where they were 3 years earlier at the end of 2012. As has been the case of the prior several quarters, tight inventories of homes available for sale continue to drive home prices upward. Also important were wage growth. Wages grew significantly over the fourth quarter, as well as unemployment rate declines, and finally mortgage rates were relatively low. Although prices grew in every state in the nation between the fourth quarter of 2014 and the fourth quarter of 2015, the strongest price growth tended to be out west. States like Nevada, Colorado, Oregon, Washington, and Idaho, all of those states had price increases in excess of 10%. Three of those states, Washington, Idaho, and Nevada, had price increases of 3% or more just in the last quarter. With a few exceptions, the weakest housing markets tended to be in the South and on the Eastern Seaboard. Connecticut had very minimal price growth over the latest 4 quarters. Prices grew 0.1%. And in Arkansas and Alabama, prices grew between about 1 and 2%. California ranked 13th in terms of statewide price appreciation, but had some very strong localized price gains. The San Francisco metropolitan area, for example, had price appreciation exceeding 20% between the fourth quarter of 2014 and the fourth quarter of 2015, and the Oakland area had price appreciation of about 12% over that same time period. In the first quarter of 2016 and in the coming quarters, mortgage rates will likely play a key role in determining whether home prices continue to rise. Also important to continued house price growth is household balance sheets. Over the last several quarters, America's households have taken on a significant amount of additional debt, including automobile debt as well as student loans. Servicing that new debt may not be difficult if wage growth continues. But if wage growth falters, then that new debt may represent a significant market headwind against continued price appreciation.